A very warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos. Let's tee off with your news now in Namibia. In central banking news, the Bank of Namibia has cut its key repo rate to 6.50% by 25 basis points, a move aimed at supporting economic growth and lowering borrowing costs for businesses and consumers. Let's take a listen.
The Monetary Policy Committee of the Bank of Namibia decided to reduce the repo rate by 25 basis points to 6.5%. This was done to continue supporting the domestic economy while safeguarding the peg between the Namibia dollar and the South African rand. This was done following a review of international, regional and domestic economic developments. Our decision to reduce the repo rate is entirely data-driven.
At the 2025 annual meetings of World Bank IMF in Lima, the International Monetary Fund today presents its latest fiscal monitor titled Spending Smarter: How Efficient and Well-Allocated Public Spending Can Boost Economic Growth. The fund projects global public debt to rise above 100% of GDP by 2029, the highest level since 1948. Under a higher risk scenario, debts could reach 124%. The IMF's Director of the Fiscal Affairs Department, Victor Gaspar, shares insights on how countries can optimize public spending to drive sustainable growth. Let's listen.
The global public debt prospects and risks have deteriorated further since our last meeting in April. In the fiscal monitor, global public debt is projected to rise above 100% of GDP by 2029. In such scenario, public debt would be at its highest level since 1948. Moreover, the distribution of risks is tilted towards debt accumulating even faster. With a 5% risk, debt would reach 124% in 2029. The world public debt landscape is very diverse. This map displays the fund's fiscal risk assessment based on the latest debt sustainability framework from Article 4 staff reports.
The World Bank IMF annual meetings continue in Lima with a special seminar focusing on productivity in the digital age. Experts are examining how new technologies and artificial intelligence can drive the next wave of productivity and what policy frameworks are needed to ensure that the benefits are broadly shared. Let's take a listen.
Productivity is not just about output per worker. Productivity is really about opportunity per person. In Africa, we see this age as we see the challenges and we see the prospects. We have leapfrogged in the past, and we think that this digital age presents a great opportunity to leapfrog further.
That live was from the seminar focusing on productivity in the digital age. In other news, PwC Morocco has inaugurated its Digital Resilience Center in Casablanca, the firm's first in the MENA region. The facility will provide strategic support for data protection, business continuity, and financial crime prevention. Launched amid growing cyber and AI-related risks, the center aims to help Moroccan and African companies strengthen digital security and resilience.
Let's now track how the markets are wrapping up for the day, starting off with the equities. It's a positive trading day for the African equities, as you can see on your screen. The Nairobi Securities Exchange climbed 1.12% to 172.24. Africa's biggest exchange, the Johannesburg Stock Exchange, rose 0.19%. The Zimbabwe Stock Exchange firmed 0.51%. In West Africa, the BRVM advanced 1.29% to 337.19. And here in Nigeria, the NGX All Share Index edged up 0.02%.
Grace, thank you very much for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.